In this week's SoFi breakdown, we're watching a strangely quiet headline week turn into a slow burn setup on the charts, implied moves getting chopped down, options piling up on both sides, and price doing the SoFi specialty, pretending nothing is happening right before something usually does. Welcome back to Fintech Spy, where we don't just trade the volatility, we zoom in on it, overanalyze it, draw 3 different fib levels, argue with ourselves about risk management, and then make fun of the whole thing. If you're new here, hit that subscribe button for more chaotic fintech breakdowns, terrible market analogies, and occasionally accurate memes. Let's hop right into SoFi. Quick reminder, I am not a financial advisor. This is not financial advice. If you're making real trades based on a parody segment, you probably shouldn't be trading. This show exists purely for entertainment, education, and the shared coping mechanism of watching candlesticks together while pretending we're emotionally stable. This week has been very quiet on the analyst front. Almost like all the bears already got their chests beating out of the way and are now on cooldown. No new initiations, no fresh upgrades or downgrades, just the same voices humming in the background while price grinds sideways. The average price target is still hovering in that mid-20s to high 20s zone, with price wandering underneath it like it's checking the underside of the couch cushions. When that gap between where we trade and where the street's models live starts to widen, it doesn't guarantee a rally, but it does make me start thinking more about entries and less about exits. It's not flashy, it's not clickbait, but sometimes no analyst drama is the exact environment where the next move quietly builds. On the news and filing side, things have also calmed down. No new SEC forms dropped this week, the last one hit back on January 9th, which is a nice change of pace after the steady stream of paperwork we've been reading through lately. The most interesting headline floating around, SoFi putting out a piece about matching $1,000 in federal contributions to Trump accounts for employees' children. Whatever your political views, it's exactly the kind of story that gets people talking in comment sections and group chats. From a pure market perspective, it's more about brand positioning and attention than immediate fundamentals. But attention is the first ingredient in every future candle, for better or worse. Chart reading time on the weekly chart. We continue the weekly cha-cha slide sideways, one step left, one step right. Not a lot of net progress. The more we tread water here, the more likely it is that when the move does come, it won't be a polite little drift. It'll be something we all feel. Both the MACD and RSI are primed and essentially reset, which is exactly what you want to see if you're hoping for an explosive follow-through instead of a tired fake-out. On top of that, the 50 EMA is slowly walking down toward current price, sitting around $22.04 right now. The closer that average gets, the easier it is for price to finally tag it, test it, and potentially flip it from a ceiling into a floor. On the daily chart, things are also getting primed for a move. RSI is sliding back toward oversold, and MACD is drifting toward neutral, which is trader code 4. We've cooled off enough to be dangerous again. What's really interesting is that even though price is only swinging about $1 in either direction, volume is still humming in that 40 to 70 million share range. That's not a ghost town. That's a lot of people trading a very small box, which is exactly the kind of energy that can turn a breakout or breakdown into a fast one once somebody finally kicks the door. On the 4-hour chart, it's more of the same story, just zoomed in and more dramatic. RSI is hanging out near oversold, and MACD just tipped negative, which sounds ugly until you look at price action. We're hovering just under the 50 EMA without really rejecting off it. That combination, momentum resetting while price refuses to completely cave, feels a lot like the Great Reset before the Great Move. Whether that move is up or down is still up for debate, but structurally, this is exactly how big legs start. Boredom, fake weakness, and then someone lights the match. Looking at the January 16th options chain, the weekly implied move has been cut in about half from where it sat when we first talked about it on Sunday night. The market is basically saying, yeah, something could happen, but we're a lot less scared about it now. On the put side, the biggest and still growing pocket of open interest is at $25 with around 60,000 contracts, followed by $26 with roughly 28.4 thousand. That's a whole squad of traders either hedging a drop into the mid-20s or openly rooting for a discount. On the call side, everything is growing too. The largest stash is at $30 with about 52,000 contracts, and the next biggest is $28 with around 33.5 thousand. That's your classic, just give me one good week crowd, paying real money to bet on a pop back toward the top of the recent range. Looking at both sides together, this chain is a full-on tug of war, and I am extremely grateful I'm not the rope. For SoFi traders, this week feels like the calm between plots, not the end of the story. Analysts are quiet, filings are quiet, implied move is shrinking, and yet the charts are quietly resetting momentum while volume stays lively. That's not what collapse looks like. That's what loading usually looks like. Big picture, SoFi doesn't look like it's ripping or dying, it looks like it's coiling again. The weekly is doing the sideways cha-cha, while the 50 EMA walks closer. The daily is packing a lot of volume into a very tight range, and the 4-hour is staging the great reset under the 50 EMA. Layer in an options chain stuffed with conviction on both the $25 puts and the $30 calls, and you've got a setup where someone's about to be very right and someone else is writing, donated to the options gods in their journal. If you agree, disagree, or think SoFi is just winding up for the next meme-fueled comeback, drop a comment and we'll spy on it next time. If you think this whole chart looks like emotional damage drawn in candlestick form, tell us your coping strategy below. Coffee, memes, or pretending you're a long-term investor now. And if there's another ticker you want roasted on this channel, throw it down below and we'll put it under the Fintech spy microscope. No guarantees on price targets, but we will provide world-class over analysis and high-quality sarcasm.